All right, Angela, thank you. Moving on to Money Watch now. The Federal Reserve cut its key interest rate by a quarter of a percentage point at the close of its meeting today amid a cooling labor market. Bradley Blackburn has more on what to expect from the Fed for the rest of the year.
Working to balance a softening labor market and creeping inflation, the Federal Reserve issued its first rate cut since last December.
The committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4 to 4.25%.
That reduction means it's slightly cheaper to borrow money, bringing down rates for credit card interest and car loans. The long-awaited move follows continued warning signs about hiring.
Really, over the last 4 months, we've seen a marked slowdown as companies kind of sit on their hands and wait to see how tariffs hit the economy. The labor market slowing down is a bigger risk than inflation bubbling up.
A stronger than expected retail sales report this week shows Americans are still spending money, though it's not clear shoppers are getting as much for their dollar. Fed Chair Jerome Powell says the central bank is still watching how tariffs may drive up prices.
Those are not very large effects at this point, and we do expect them to continue to build over the course of the rest of the year and into next year.
Powell expects inflation to tick up to 3% by the end of the year and unemployment to hit 4.5%. Chair Powell projects more rate cuts at the two remaining Fed meetings this year, likely a quarter point each, depending on economic data. Bradley Blackburn, CBS News, New York.